Hi students, welcome to my YouTube channel. In the last two classes, we have learned about the definition and features of partnership firm, partnership deed and their provisions, rules applicable in the absence of partnership deed, and partners capital account, and specimen form of fluctuating partners capital account. Today, we are looking at problems and solution about this topic. Look at this question written on this board. Let me read this question first. That is, on 1st April 2016, Anil and Sunil entered into partnership, contributing rupees 60,000 and rupees 50,000 respectively. They agreed to share profit and losses in the ratio 3:2. Sunil is allowed a salary of rupees 12,000 per year. Interest on capital is to be allowed at 10% per annum. During the year, Anil withdrew rupees 9,000 and Sunil rupees 10,000 on drawings. The interest on drawings paid by Anil and Sunil rupees 200 and rupees 300 respectively. Profit for the year ended 31st March 2017 after the above adjustments rupees 35,000. Prepare partners capital account under fluctuating method. That is, partners capital account under fluctuating method should be prepared. Let us see how. First, look at what is given in this question. First, whether ratio is given. If not, share equally according to the Partnership Act. Then first one, name of the accounts. Partners capital account under fluctuating method on the center. Then draw the columns. Left hand side is known as debit side and right hand side is known as credit side. First columns date, second columns particulars, third columns amount columns. There are two partners. Draw two amount columns as there are two partners. Three amount columns as there are three partners. Four amount columns as there are four partners, and so on. First Anil, then second Sunil. Again right hand side. First columns date, then second column particulars, third columns Anil, and last columns Sunil. First, on 1st April 2016, Anil and Sunil entered into partnership, contributing rupees 60,000 and rupees 50,000. Right hand side, for the dates entered on the date columns, 1st April 2016, by bank, amount introduced as their capital. Anil rupees 60,000, Sunil rupees 50,000. Then next, Sunil is allowed a salary of 12,000 per year. 31st March 2016, that is year end. By Sunil salary 12,000. Then next, partners are allowed interest on capital at 10% per annum. That is interest on capital. Anil, the amount of capital 60,000. 60,000 into 10 by 100, 6,000. Sunil 50,000 into 10 by 100, 5,000. That is amount on Anil 6,000 and on Sunil 5,000. Then next items, share of profit. Profit above adjustments. After above adjustments, profit that is 35,000. So 35,000 into 3 by 5. The ratio is 3:2. That is 3 plus 2, 5. 35,000 in 3 by 5 and 35,000 in 2 by 5. Anil gets a profit rupees 21,000. Sunil gets 14,000. Then next left hand side, that is debit side. First items drawings. Anil's drawings 9,000, Sunil drawings 10,000. Then next item interest on drawings. Anil interest on drawings 200, Sunil 300. Then next account balance. You have already learned about an accounting balance in the +1 classes. Find the difference between debit total and credit totals. Put the difference on the lesser side so that two sides become equal. Write balance carried on against the balancing amounts. On the next day, the balance is brought down. The total on Anil 87,000 and Sunil 81,000. The difference is 77,800 and 70,700. The account balance is 77,800 and 70,700. Write on the opposite side, balance brought down. That is 77,800 and 70,700. This is how it should be done. Then next, profit and loss appropriation account. Profit and loss appropriation account is the extension or continuation of the profit and loss account. The entries in this account are passed giving effect to the partnership deed or the Indian Partnership Act 1932. It starts with the net profit or net loss is transferred from profit and loss account. Net profit and interest on drawings are entered on the credit side, whereas net loss, interest on capital, partner's salary or commission, reserve are entered on the debit side of this account. The balance represent either final profit or loss is distributed among the partners in their profit sharing ratio. First, let us look at the specimen form of profit and loss appropriation account. Look at this boards. First item on credit side, net profit brought down. That is transferred from profit and loss account. Then next, interest on drawings. Then last, loss transferred to the partner's capital account in the profit sharing ratio. Then on the debit side, first item, net loss brought down. That is transferred from profit and loss account. Then second, interest on capital, partner's salary or commission, reserve. Last, profit transferred to partner's capital account in that profit sharing ratio. These are the specimen form of profit and loss appropriation accounts. Then next, partner's capital account under fixed method. What do you mean by partner's capital account under fixed method? When the partners agree, the amount of capital contributed by them shall remain fixed and shall not be reduced or increased during the term of the partnership except by special agreement. The capital accounts are said to be fixed capital. Under such circumstances, it becomes necessary to have a current account of the partners. When all the adjustments such as interest on capital, interest on drawings, partner's salary or commission, share of profit or loss will be made in this account. These are the specimen form of partner's capital account under fixed method. First account is known as partner's capital account. On the credit side, balance brought down, opening balance of capital account. Second one, bank, additional capital if any. On the debit side, bank, that is withdrawal of capital, out of capital if any. Second one, balance carried on, closing balance of capital. The second account is known as partner's current account. On the credit side, balance brought down, opening balance of current account. Second one, interest on capital. Third one, partner's salary or commission. Fourth one, profit and loss appropriation account if profit. And last one, balance carried on. That is closing balance of current accounts. On the debit side, balance brought down, opening balance of current account. Interest on drawings, balance carried on. That is closing balance. These are the specimen form of partner's capital account under fixed method. There are two accounts are prepared. That is first one, partner's capital account, and then second one, partner's current accounts. This chapter will continue in the next video. If you like this video, please like. If you not subscribed yet, subscribe and click on the bell button to get a notification on the latest video. If you have any suggestions or questions regarding this topic, please send us know in the comment or email. Thanks. See you at the next video.